We are live with Terry, our ninth podcast. I can't believe we've done
Yeah.
it.
Oh, it's nine of them?
Yeah.
Wow.
Nine. So again, my name is Darcy LaRock and super excited to be here. Terry Osti, who is always here too. You're listening to the Agent Tech Mastery podcast that we think revolutionizes the real estate business. I've had almost 3 decades in IT, and Terry has almost 2 decades being a real estate agent. And we are your guides today, streamlining operations, saving time, and boosting your revenue. Discover cutting edge technology, systems, apps, and a mindset for a profitable business and integrated business. And if you want to know how to get there, you're in the right place. I am so excited today. We have the lovely Lynn Kelly, who is an incredible mortgage broker. We personally have used her we move a lot. Did we tell you guys this? We move a lot. Every time the market's up, down, making some money, Terry's like, let's sell. And Lynn has been around helping us. I don't even know how long we've known you. Anyone
Oh
know?
my God. I think Terry and I figured it out. It's got to be about 15 years now.
At least
Oh my
15. Yeah.
goodness.
Wait.
Okay. Well, you guys are in for a treat because this kind of came about when we were in Vancouver actually, and we were out for dinner and we were talking about, stuff we talk about. And interest rates came up and Lynn was talking about, and for me, I didn't know this. I'm sure Terry did, but I also think that a lot of agents don't know it. And this podcast is generally usually for real estate agents, but this is really for the broad public, where we want everybody to understand this better. Because when interest rates in Canada, and it just happens to be today that our interest rates in Canada dropped by what, 425 to 375. So we want Lynn to kind of, in a dummied down version of, I saw a post today because all realtors are now saying, hey, the rates changed. Yay. Now maybe someone literally put that housing might just be a little bit more affordable. Lynn, is
Okay.
it?
Okay. First thing I'm going to say is that rate that you were just quoted, the Bank of Canada rate, the
Yes.
3.75, that is not the rate that the banks use. Okay. So
Yeah.
people think that's the rate. That's not the rate. So previous to the drop, it was 6.45. And now with the half point drop, it's actually 5.95. So that's what prime is at for lenders. So for the public, it's at 5.95, and then they get a discount off that for variable. So
Okay. I'm already confused. Hold on. Can I go back? Because
no,
listen,
no,
I'm gonna be totally
100%.
upfront with you guys. I don't
Yeah,
know any of this stuff.
100%.
We got a mortgage, we're paying it, whatever we're doing. I know what our thing is, but okay, so the bank rate was 425.
Yeah, that's the Bank of Canada rate that they
Okay.
keep putting in the paper.
That's
That is
BOC. They put that in the paper.
Bank of
BOC means
Canada.
Bank of
Yeah,
Canada.
Bank of
It
Canada.
was 4.25
2.25,
and
correct?
it went to
0.75.
3.75. Now you're talking about that's for what? Like investments? What's that?
So that's the rate that they sell to the banks at. They sell the cash to the banks at
Okay.
that rate.
Okay.
So the banks then turn around and take the rate. So the bank's prime rate is different. So the
Okay.
bank's prime rate, so you're talking 4.25, right?
Yeah.
That's what it was. So the bank's rate was 6.45.
Okay.
So
Gotcha.
now we're going to relate the half point discount. So yours on the Bank of Canada is now down to 3.75.
Yeah.
The banks are now 5.95.
Okay.
So
Got it. I get it.
that's the rate that the clients are looking at, 5.95. So it's important to note that because the discount off of prime. So when someone's taking a variable, they get a discount off prime. So a lot of people are in variable right now, and let's talk about those people. They're getting
Okay.
relief because
Ah,
for every 100,000 of mortgage that they have,
yeah.
we'll average that on a 25-year amortization.
Yeah.
They're getting relief about $30 a month. So if they had a $400,000 mortgage, they're getting relief about $120 a month now.
Oh, okay.
So it's a
Okay.
big drop. It's
Yeah.
really helpful to those people, right?
Yeah. Yeah.
Okay.
On variables.
On
Unbearable.
variable. On variable. 100%.
Okay, so, sorry, can I just interrupt for a second? So
Yeah,
if I have a variable mortgage, which means that my mortgage rate, it fluctuates based on
correct,
the Bank of Canada
correct.
increasing or decreasing.
Correct. That's a great question. That's a great question, Darcy. So, yes, it fluctuates, but history tells us, previous to what we've just been through with the 8 increases, but previous, the people who take variable
Yeah.
inevitably come out ahead of people who take fixed rates over
But
the
they
long,
have to,
even with the up and down. Yeah, you have to suck it up. But even with the up and down, if you don't look at it and you
yeah.
just look at it at the end of the year, you've come out ahead of the people who are in fixed rates. You
Do you
just
know
do.
the percentage roughly?
No, I don't
Okay,
know. I don't know the percentage, but
just
I just
curious.
know
Yeah,
overall. I mean, if you Google it, you'll
yeah,
see that people in variable overall come out ahead of people in
yeah.
fixed. So now
Interesting.
I thought you were going to ask me a different question, because the question you just asked me is right. It goes up and down. If
Yeah.
if you have an adjustable rate mortgage, so there's two types of variables. And the variable that is really good is the one you described, up and down, because as the rate goes up and down, so does your payment. It changes and it stays with, because that way your amortization, so the length of time you have the mortgage for, your
Yeah.
amortization will pay out in time, because as it's going up and down, it's equalizing the amount going to principal and the amount going to interest.
Ah,
Okay, so
okay.
that's the good one. The one that we heard a lot in the paper, there was a lot of talk about the trigger rate. And I don't know if you remember reading that, but the trigger rate was getting hit by people as the rates were climbing for variable, with Bank of Canada rate. So the trigger rate, that is a variable that has a fixed payment. So a lot of banks talk about, hey, we have the best of both worlds. We have a variable rate, but with a fixed payment, so you don't have to worry about that
Ah,
fluctuation, right?
gotcha.
So
Yeah.
a lot of people think, hey, that's fantastic, except what we just went through. When the
Ah,
rates are continually climbing, what that means to your payment, if you're in a fixed payment, what it means is less and less of your payment each time it goes up is going to principal, more and more is
right.
going to interest. And
Ah,
bad part there is that eventually, as they did when they climbed, you didn't have enough of your payment to even touch principal. So you were paying simply interest, and
ah,
amortization is bumping further out beyond what it
ah,
should.
okay.
So the bank then, what happens is you hit your trigger rate. And the trigger rate means the client then either has to put a lump sum payment down towards the principal because it hasn't been touched,
Hmm.
or they increase their payments. And in some cases, I can't quote you like whose, but in some cases, depending on the size of the mortgage, that could be like a $2,000 a month payment increase.
Whoa. Yeah.
So that is a mortgage that I completely stay away from. If you want a fixed rate mortgage, take a fixed rate mortgage. Stay away from variable with a fixed.
Ah, okay. That's interesting. I
Right.
didn't know that. Wow. So I can imagine, I'm just thinking about if somebody, you're just getting your first mortgage or whatever, and you don't, actually, I'll tell you my own personal, way before Terry, I bought a condo. And I had all this stuff, and that was sadly before I met Lynn. I had no idea about any of this stuff. And I was on a variable rate mortgage, which I understand what you're saying,
Yeah.
that it was better long term. I'm sure they told me that. But I was a single person. I was my first place, and I was stressed out every single time. Like, oh my God, my payments are going to be more. And I get it now. It's like I probably stressed out too much about it, but I was very stressed out about how do I know, because we can't control this interest rate. So,
Exactly.
I can't remember what I was paying. Let's say it's $1,000 a month, and then suddenly it's 1,500. Like that's a
Yep.
big jump.
Yep.
And so I wonder, like, I don't know, what do you tell people when, like, whether you have the heart to go through all this, or is it better to just get a mortgage that forever what your payments are?
No, that is wonderful. Like what you just said is wonderful. So when I'm talking to first time home buyers, and if it's a single person, we have that discussion. And I'm
Yeah.
saying, if this is their first time, I highly recommend, despite the fact that variable is a good rate, you need to get your feet wet because you're used to paying rent. And now
Yes.
you're going to have to pay condo fees. You're going to have to pay
Yes.
your property taxes, and anything that goes wrong in your apartment, you're going to have to pay for it.
Yep.
So you can't pick up the phone and call someone. So to
No.
get you used to that, let's put you in a fixed term, fixed rate, and get used to that. You're
Yeah.
going to build up equity. If you do that for the first few years, even if it's 3 or 5 years, whatever, you're going to get used to that. You're going to get in that groove, and then you're going to be very comfortable. You're going to see how much it actually costs you and then how much you can actually save. At the end of that, you come up for renewal.
Yep.
Let's discuss your options at that time and what your
Yep.
comfort level, because it may change. You're going to get increases in income along the way.
Yes.
We'll rediscuss it. Yeah.
Yeah. Perfect. That makes perfect sense.
Yeah. Yeah.
Okay. So then now back to reality of today.
Yeah.
So what happens then with the fixed rates for when the Bank of Canada rate drops? Anything?
I love that question. Okay. So fixed rates, so people with fixed rates, today's cut will not affect them at all. Their fixed rate is their fixed rate. They've signed up for a
You're
term.
locked in.
They're locked in for their term, and
Okay.
that will not affect them.
Okay.
And then, so people are expecting, because the Bank of Canada cut rates today, they're expecting the banks to relate that to fixed rates tomorrow.
Okay.
Not going to happen. It
No.
affects variable. It does not affect the fixed rate. The fixed
Oh.
rates, it's funny. I just pulled up an article, and it says the fixed rates are governed by the Bank of Canada bond yields. So two different things drive the rates. So Bank of Canada drives prime, which is variables based on prime. The
Oh.
fixed rates are based on the the government, the bond yields. And so you could have today, you could have the variable, the bank prime drop, but the bond yields, which it does happen where they can be going up.
Oh.
So I can get I'll just read you exactly what I have here. So fixed rates, this is straight from the mortgage stuff that I get. Fixed rates have already seen their own reductions in the past few months. While the trajectory hasn't been a straight line, lenders have been steadily cutting the rates, coinciding with a steady decline in Government of Canada bond yields, which lead to fixed rate pricing. That's what it's based on. So while a rise in bond yields earlier this month caused some lenders to start raising the fixed rate mortgages, experts think the downward trend will continue. So as a mortgage broker, every day I get a ton of emails from all the lenders telling me what they're doing with their rates. Some go up, some go down. So they do based on what their company is doing or what they think is going to happen with the yield. So that's why people should go to a mortgage broker, because we can see daily what the lenders are doing with the rates. It makes
Because you get it from all the places.
all
Whereas if so, this is just this is not my specialty, you guys. When we were out for dinner with Lynn, I was like, we need to talk to people about this because I can't be the only ignorant person out there, right?
oh
And I
no,
see
no,
some
no.
comments with on forums that I'm maybe ignorant isn't the right word, uneducated. I don't maybe
No,
is that
it's not what you do every day. Like
no.
my favorite saying as a broker, you don't know what you don't know. And in that case, you can't even ask the question if you don't know the question to ask.
Right,
Right?
right.
Like,
Yes.
and that's how my whole philosophy is when I'm dealing with clients is I give them the information. If they want to shop around, I encourage it. Like, go
Yeah.
ahead.
Yeah.
But you need to know to ask the right questions.
Right.
And if you don't,
Listen, yeah, listen, for anyone who is listening to us, I can tell Lynn has helped so many people that we know, because, and even us, we needed financing for something and nobody could do it but Lynn. Lynn, are you okay if I give out your info?
oh, 100%. Yeah, yeah,
Okay. So I wrote it down here. So Lynn's phone number, and can you work all over Canada?
I can.
Oh, okay. So perfect. 778-839-9363. I will also put it in below on YouTube when I get a chance. And your email, I believe, is Lynn, two N's,
Yep.
at Lynn Kelly, no E, well, one E, KELLY.ca. If you want to talk to Lynn, it's always good to have someone like Lynn in your back pocket. I know, Terry, you guys talk a lot about stuff and how things work. And so if I was going to get, let's just use it, today is today, and I'm going to go get a mortgage, I'm going to talk to you. What is the fixed rate?
A fixed rate, depending on the term. So I'm not recommending long
Just
term.
rough.
Yeah, just rough. I'm in the like low fours right now for like a 3-year term, like 4.24, 4.34, in around that range right now
And
for.
what's variable?
So variable is going to be now with the new 5.95 minus, let's say, half, about 5.45.
Okay, so you're saying that I could have a fixed rate for 4.2524 roughly,
Yeah,
and a
yeah,
variable at 5.45.
correct.
Now, just me, just looking at those numbers, the variable doesn't seem like a good deal.
So just think about it. There's another rate decrease coming in December. So the Bank of Canada sets out the days that they're going to review the rates, and the next one is in December. And
Okay,
the predictions right now is that it's going to drop another quarter point, which is going to make it 5.7, 5.70.
still
So
not 4.24.
no, it's still not 4.24, but then we're going into the new year.
Yeah,
If the market stabilizes and inflation stays down, and well, it depends what happens with employment, because there's a lot of things that drive those their what their decision is.
okay,
But again, my point was overall, overall you do better with a variable.
right.
So
But if I was doing it today, and
yeah,
so let's say I sign up for a fixed at 4.24, okay? But I am now stuck in that 4.24 for
yeah,
3 years.
yeah.
And if in year two, somehow the variable rate keeps dropping and now it's two, I think, Terry, when we did ours, it was one something.
That's it's not going to happen anymore.
I know.
That's not going to happen. That ship has sailed.
But as it goes along, I'm in this fixed mortgage, and now let's say it's 2.5. Can I get out of my fixed? Is it
You
worth
can.
it?
No, you can get out of your fix, but you're going to pay a penalty. Because as soon as you break that, as soon as you break that term, you're
Yeah.
going to pay a penalty. It's no different than getting out of a car lease.
Yep.
Like they are counting on that interest, and then
Of
you break
course.
it, so they want that interest. So
And how is it usually 3 months, or how's it? I kind of
that's
different.
it's different for different lenders, but
Okay.
the quick answer is it's usually interest rate differential, but it really depends what the rates are at the time. So example, if you're at 4.24 and what you're saying is true, if the rates have gone down,
Yeah.
so now they're at like 3.75, they're not going to let you out of that 4.25. You've got a contract. And so they're going to charge you the interest rate differential, like because they're buying funds at the bank,
Ah,
right? And so now they're going to let you out of a contract that they were counting on the interest, because banks turn around and lend that money out. So they're
right.
out of balance, right?
So I
So
should be talking to you if I ever do that, to figure out what is in my best interests.
so I'm just going to flip you now to a variable. You're in a variable and you want to get out.
Yes.
3-month interest penalty.
3 month interest penalty.
3-month interest penalty and you're out. It's simple interest.
Okay, so that's better.
You can
Well,
break it.
easy to calculate anyhow.
Easy to calculate and easy to get out of,
And
100%.
then you can also figure out easily what a fixed would be.
So when you're in a variable, and let's say you were in a variable when the rates were going up,
Yeah.
a lot of people were. A lot of people locked in, because when you're in a variable, you can lock in. So you just have to finish out your term. So the variable is normally a 5-year term.
Okay.
And
Okay.
that's because it goes up and down. So there's no point to having 1 year, 2 year, because it normally goes up and down.
Like buying stocks, low, high, low, high, low,
Yes.
high. Overall, it evens
Yes,
out. Okay.
exactly. And so it's naturally bouncing. So you can lock it in. So let's say you've done 2 years. And so the people that were in when the rate started to climb, that let's say they have done 2 years already,
Yeah.
and now they want to lock in. So as long as they finish off their 5-year term, so they can lock into a 3, that'll do their 5, or they can do it,
Oh,
or they can do a 5.
oh, I see what you
Yeah.
mean by locking in.
Yeah.
Okay.
So
Okay.
it's got a lot of flexibility to that.
Interesting. Okay.
Very.
Well, that makes more sense to me. So if I'm just going to do a recap of this portion of this is the Bank of Canada rate,
Yeah.
decrease or increase only applies to variable rate mortgages.
Correct.
The fixed mortgage rates are bond yields.
The bond yields. Yep. But what the bank of the bond yields are doing. Yeah.
Okay. And that really doesn't impact me if I'm in a 2 years into the fixed anyhow. So it
Nope.
only matters if I'm buying today.
Correct.
Okay. That's
Correct. And a lot
pretty
of times
easy.
I'll say to a client, so I've been, because I follow The Economist all the time, and so they're saying I don't know what I should do. Like I want to take a variable, but
Yeah.
and I'll just say, well, here's the predictions. Like here's what the economists are saying. If I had a crystal ball and I could tell you exactly what to do, I could be very rich. But I don't have a crystal ball, but I can tell you that here, based on information, you can make the decision about what you're more comfortable with, right? But again,
Okay.
for
Yeah.
first time home buyer, I probably wouldn't put a variable.
Right. And that makes sense what I did because I was quite stressed. I was variable and I was very stressed out all the time
Yep.
about how could I afford to stay this. It all worked out in the end, guys.
Yeah.
But it is stressful. So, and now like it wouldn't matter because you're right. Now I know how it works better and, their income's better and all that other stuff. So
Totally.
you're absolutely right what you said about that. Terry, do you have any comments?
Yeah, no, I that's great. So a lot of the hype today, or in previous announcements from the Bank of Canada, people getting really excited because it's going down, but it's only affecting a small portion of the potential buyers out there right now. Correct?
100%.
Yeah.
100%.
So yeah, so I get it. Like I know Darcy, you're looking at social media, I was getting excited and stuff like that. So, but it's only applying to a certain amount of people. But what I wanted to ask you, Lynn, is about, so you do have a buyer that wants to buy a place, and now with all these fluctuating variable rates and fixed rates moving around depending on the bond deals and stuff like that, what assurances are these buyers getting when they finally make that commitment that I want to buy this place, that they're going to get whatever rates on the table today? How
Ah,
much time do they normally get
good one.
to get this done, right?
So that's an excellent question. So for a fixed rate, what they're going to be guaranteed is that's the rate. And normally depending when their completion is, if the rate drops before they close, they're going to get they'll get the lower rate. So that's a fixed rate. That answer that question for that part?
So it gives
Yeah,
them security that this is the most they're going to pay as long as the rates staying there or going down within that time frame.
correct.
So if it goes up, it doesn't go up?
Nope, because they've been guaranteed that rate. That's what
Okay.
their contract at the time that they booked it. That's
Okay.
what. So
And
for a fixed,
how long is that?
usually 120 days. Different lenders, some 90, some 120, but yeah, they're protected once
Okay.
they hold that rate. Yeah,
Excellent. That's on a
And
fixed rate mortgage.
that's on a fixed rate. So let's do variable. So the people that have maybe just been pre-approved for a variable, they were based on 6.45 minus their discount. As of today, when they're going to close, because how their commitment letter is stated, it's based on prime minus at the time of your booking, prime was this. But at the time that they actually get it, it will be 595 minus. So that
ah,
it'll automatically draw. Yeah.
okay, interesting.
Yeah.
And for people listening also, and again, I am not a realtor and I am not a mortgage broker, so I don't know, but I just have heard many things go on. So anyone who is, well, I guess this is for agents too, but if you're a normal person looking to buy or buy a property, you should be pre-approved, correct? You should
Oh,
not be
yeah.
looking, I don't know, but it makes no sense to go looking without. Okay, can you comment on that, either of you guys?
Well, I know like for me, protecting the realtor, I would say, if I'm working with realtor, I let them know the client is ready to go. I've got the financing ready to go because
Yeah.
I don't want to waste a realtor's time
Oh, yeah,
writing
right.
offers and then finding out that it's not going to go through. That's a waste of everybody's time.
Every single person's time. And I think that does happen a lot. Like, it
A
doesn't
lot,
make sense to me why an agent wouldn't have their client pre-approved before you start showing homes. It makes no
100%,
sense.
100%.
Okay. Okay. I am reading that right. Correct. Okay. You guys hear that, agents? Make sure people are pre-approved because really, like, it does make sense. Like, I don't know, let's say they think that they can buy $1 million home, and then we find out after that they can only afford 750. That's a big difference.
And that's true. And then it's especially true for first-time home buyers who may need an insured mortgage. They have less than 20% down. So
Oh,
for those people, there is the premium, the insurance premium that gets added on. So a lot of those people, they go on mortgage calculators and they go, oh, I can afford that payment because they're simply taking the purchase price less their down payment, but they're not adding in the premium, which can be pretty hefty. And
ah,
so they when they get to me and they'll say, "Oh, I've already run my numbers," and I'll say, "Well, we'll do it together." And then I do, and they're going, "Well, that's not the payment I had," and I'm well, the insurance premium is in there now, which is $12,000, which you were
oh,
counting on, and so it changes your ratios, and yeah, you need to be pre-approved. You need to talk to a broker.
Yeah.
okay,
So
okay.
so you know what happens in the real estate business, because you know you've been in this for a long time, and so have I. We actually never said how long Lynn's been in the industry for. We talked about us
My
only.
God, you
Oh.
are so mean doing this. I've got you both beat. I'm coming up to like 40 years.
That's amazing. That's a badge of honor.
That is a badge of honor. Oh my
We're talking 40 years
gosh.
of experience.
Okay,
That's
somebody knows their stuff.
exactly. So one of the questions I have, because we know in the real estate business, there's buyers markets, sellers markets, and balance markets.
Yeah.
And depending on when you're selling real estate, for example, in a buyer's market and you're a selling agent and your client says, Terry, I just have to sell this and blow this thing out because I need to get this thing done. So there's lots of strategies to that. You could say, okay, well, one strategy is if we know the house is worth about let's say $600,000. Let's list it for 550 and do offers on Wednesday night at 7 o'clock. That's one strategy. And hope we get close to 600 or more through this process, right? So that can happen in a buyer's market, a balanced market, either even in a seller's market, of course. So what can happen is you, as a buyer, you fall in love with this place and you go, oh my gosh, this is the place, right? And then you have to put an offer in, and then the seller knows and the buyer's agent knows it's kind of worth 600, but you need to go in and you need to win, right?
You're talking about multiple
Win.
offers, Terry?
What's up?
You're talking about multiple offer
Yeah,
situation? Yeah.
yeah.
Okay.
So then you make some really bad emotional decisions and you go 650 all in. Let's just get this thing. And you win. High fives, champagne, all going on now.
Do we have financing?
Well, they've been approved, pre-approved,
Okay.
but they haven't been approved for this particular purchase because that's step two, right? So then the next thing you know, your mortgage broker, your lender, whoever, Lynn, you get the contract the next day,
Yeah.
and now you have to go through this scenario.
And I
Sorry,
go,
can I interrupt? I don't understand that. So I'm approved for 650. I offered 650.
No, we don't know
no,
what you're
no,
approved
no,
for yet.
no.
Oh, then you're approved, but
Let's say they were approved. I get this. I get exactly where you're going, and I have a big answer for that one. So, um, so let's say I've approved someone for 620.
Yes.
They go to this house that Terry's describing and they fall in love with it. And there's other
Yeah.
people interested and they go, let's just go for 650. We can afford it. Let's just do that. And they put it in for 650 and they come back to me, or I get the offer and I look at it like 650. Oh my God, like 650. Okay. Here's the thing that strikes fear in my heart is like immediately call the realtor and go, is this house worth 650? Is it going to appraise at 650? Because if it doesn't appraise at
Oh.
650, The lender, in all cases, will only finance the lesser of purchase price or appraised value. So if the house appraises at 620 and my client has offered 650, they're on the hook for $30,000 cash because the lender's only going to approve 620, the appraised value.
Oh,
Yeah,
oh,
yeah.
people, everyone listen to this.
That's a big deal.
It's
Huge.
huge.
But I guess they were thinking that what's another 30,000 to put it on the mortgage, but that's
Exactly.
not reality.
100%.
Wow.
Because the lenders, well, they are not going to finance over market. They're going to finance market value, and that's done by appraisal.
So can I ask the question again? You guys remember I'm not an agent or lender. So in that scenario, if Terry was my agent, shouldn't he have said you can't put an offer at 650?
No, the agent would probably say, have you checked with your broker? Can you,
Your mortgage broker.
your mortgage broker, can you offer 650?
And
That's
so agents should be doing that.
100%.
So agents also would know, they would know the pre-approved amount. So in this case, Terry, I know you would never do this, but we'll use that you as an example.
But
So
sometimes they don't know the proof. Like sometimes they'll say to an agent, sometimes they want to keep that close to the vest because they think that the agent will immediately take them to the top of their limit. So sometimes they don't share it.
oh, so it's not shared with every agent doesn't know what the client's
Not
pre-approved
necessarily.
for.
Not
Oh, I don't know.
necessarily.
Terry, do you normally know?
Well, I know because I usually deal with a lot of people within my immediate sphere, and I'm not dealing with just random people from the street usually,
Yeah.
right?
Yeah.
So we have really good relationships, and then I have relationships like Lynn does a ton of work for my clients, so I know if they're talking to Lynn, they're getting taken care of, and more
Yeah.
than likely they're going to tell me what the numbers are.
Okay.
Right? Because they know, love, and trust me, or know, like, and trust me, so we can talk
Yeah.
about these things. But if it's a stranger who we don't have a relationship with, then we get this apprehension, right? About should I like they don't know me and my ethics and how I run my
Yeah.
business, and so maybe they may be a little apprehensive to even saying that. But once
Interesting.
once you get that relationship happening and that no love trust, the no like trust thing happens, then you're good. You have these really really personal conversations about money, right?
Well, but I mean, that's really important because how disappointing is that whole now? So actually, so what does happen? Their offer got accepted, but now the lender won't pay. Is that subject? Hopefully, there's a subject to financing.
Well, and that's interesting. I'll let Terry talk to that because when you're in a bidding situation, a
No
lot of
subject to
times
financing. So what
they,
would happen? What would happen? They would have to come up with the 30 grand.
yep,
Okay,
yep.
my heart is a little bit palpitating with these poor people I don't know, don't exist.
There you go. And it's just so important to have those conversations and to
Wow.
ensure that that everyone knows the rules. And so I mean, I know that Terry would say to them, are you approved up to 650? Can
Right.
you do this? Because if it doesn't appraise, because he knows the rules. If it doesn't appraise, you're on the hook.
Wow.
Yeah.
That's a huge lesson, realtors out there and you know, regular people that are
Yeah.
got pre-approved that know your numbers and don't go over. That's interesting. I didn't know that. Okay, interesting.
The one more layer to that.
Yeah.
So let's say you are pre-approved for 650 and you're going to go in for 650. But that doesn't necessarily mean it's going to appraise for 650 because it may not be worth 650 all day long. It might be worth
Oh,
but even though you're approved for that,
It's the appraisal.
yeah,
It's the appraisal.
the appraisal might come in different, right? So you have to
so wow. You know what? I'm learning a lot today. So hold on here. So we all know that city like appraisers of a home, they don't know. So
you're
who's going in? So let's just
talking
say,
about the assessment value.
yeah, is that what they're going, or do they actually come out and look at the house? Like, how's that work?
They go out. So an appraiser's job is actually a really important one, and a lot of people don't realize what they do because everything is determined by market value. So the market value, Terry and I had talked about this so much, but market value is determined by what you'll pay for a house. What you'll pay for a house, a particular house, and what I'll pay for it, two different things. So
Yep.
it's determined by what you'll pay. And so an appraiser's job is to do compare the subject property, the one that the client has bought,
Yeah.
and find recent comparables, 3 of them, to within the neighborhood, very similar homes, and compare them. And so what they have to do is they use the subject property. So let's say the subject property has a double garage, and they've just found a really good comparable, but it only has a single garage. So they have numbers like assigned to an extra garage would be this much. So they add
Oh.
to, and they make each comparable comparable to the subject property. And they come up with a value for each of them, and based on that, they come up with a value. So it's not just, this is what I think, it's a process.
And
so,
is that who's the appraiser? Is the appraiser from the bank?
yeah, so every bank has a list of approved appraisers that they use. And then as brokers, we get to choose from that list.
Okay.
And
so you could be hooped on that too, because what if like everyone thinks the house is worth 650, and then the appraiser comes in and says no, it's 580.
Oh,
now we're hooped on that too.
Well, it's the appraisal that Terry was talking about. So if these people paid 650 for this house, but it was I think what was the number, 620 or something, 620. And so if they paid 650, it's all based on the appraisal. So we definitely, because it's over ask, we definitely have an appraisal.
Okay. So if I understand this correctly, if I am buying a house and I am pre-approved for whatever amount, the appraisal has to be at least that amount.
Yeah, whatever with the property that they're looking at. So normally, because the realtors are listing the house, right? So the realtors usually does a CMA, like a market analysis. So they do the CMA, and 9 times out of 10, the realtors bang on with what's in the neighborhood. So when it's listed, the scenario that Terry was using is that let's say that person wanted to blow it out, so they went under and try to create and so emotions get into that, and then that's where the person went, I just want it, I'll pay this. And so my job is, I tell people, like, be careful if you're getting, like when we were in that the era of everything bidding situation and no subjects, no inspection, it was giving everybody, the lenders especially, heart attacks, and it was terrible. Like, it doesn't protect the client at all. Much as we try to, they're not protected.
Wow. So, well, this is pretty enlightening, and I know you had a limited time with us, so I think are you good? You need to go?
I'm good.
You're okay for a little bit. If you have any more questions, Terry, do you have any other
no, it's really good
you want to run by?
I know, because the media does a lot of manipulating, if you want to call it that, as far as hype and all that kind of stuff. So we're getting the real nuts and bolts of this whole scenario, this Bank of Canada rates and stuff like that. So I really appreciate that, Lynn, for straight goods. This is who's benefiting, and this who's not benefiting, and this is how it all works. No fluff, no hype, no agenda, right?
Yeah, it's numbers. It's really numbers, knowing your numbers.
No, because I don't know.
Yeah.
The media is so annoying when it comes to stuff like
that.
that.
I agree. Don't love it, but when we sit here and just talk and ask questions, and thank you very much, this has been enlightening for me. I didn't know that. I honestly didn't know a few things that you've said, and I think the moral of the story is that everybody needs to get pre-approved, and they have to work with a good, reputable agent that also I think you should tell them what you're pre-approved for, and don't go over that.
And I'm just going to add one thing to that, because I mean, I'm sure that Terry in his career has come across this. So says to a client, have you been pre-approved? And they say, yeah, I talked to my bank. So, and I know Terry's really good at this. Like, well, get a second opinion, talk to Lynn. And my first question to the client is, great, you've talked to your bank. What did that take? About 10 minutes, 15 minutes? They go, yeah. And they think that that's the right answer. And it's so not, because
Oh,
all they did was ask for their pay stub, get their social insurance number, and say, okay, you can go shop for.
yeah.
And and then I say, is that how the conversation went? And they went, yeah, exactly. And I'm like, okay, so when we talk, I said, we're going to be on the phone for at least an hour. We're
Yep.
going to go through all the rules and we're going to go through your closing costs. But besides your down payment, you need to have this money set aside to complete your deal. So we're going to
Yes.
do all of that. And then we're going to run your numbers together, because all the theory we talk about, you're actually going to see it in practice. So
Ah,
they, like what you're saying, I learned so much. They're going, oh my God, I'm going to be dreaming numbers tonight, but
yes.
I now understand this much better. And
And
that's,
listen, oh my God. Okay, I can tell you because I know I've recommended friends too. And and I'm sure Terry, I don't know all the people you've recommended, Lynn, but I know everybody says they can't believe the detail you went into as opposed to going to the bank. I'm glad you brought that up. And I know personally, Terry and I, we've worked with you for some of our stuff. And I listen, okay, you guys, I'm going to tell you a story. I'm going to not mention lenders, but banks. We had an issue with a bank and we were getting the runaround and nobody could explain stuff to us. We called Lynn. I think you spent an hour and a half with us. You didn't get paid for this, right? Like this is the type of person Lynn is. I cannot stress this enough. And okay, I can go on about you. She went on and helped us, and it was all amazing after we understood. And then another thing that you did that I again thought like this is the kind of person you want to work with. My mom was wanting. I can't even remember. Do you remember? I can't even remember because it was so many years ago. I recommended my mom talk to you. And then I said, oh, you know what, Lynn, I don't think she's going to do anything. I don't want to waste your time. And you said, I don't care. It's your mom. And she needs to understand this. She didn't get anything from it. Like that's the kind of person Lynn is, and that's why Terry's been recommending her for I don't know, whatever 15 years. I recommend Lynn, amazing, and you got to have people behind you and with you when you're going through stressful situations like this. Right? Buying a home is very stressful.
yeah.
It is. It is what it is, and you need a really good lender, a broker, sorry, mortgage broker. And you need a really good agent that is standing behind you, not people, not anyone that's just out for the money. That is not good business model.
One and
So
done. The one
the
and
one
done
and
people.
done,
No.
yeah, no, not good. So I want to really thank you, Lynn, because I know again you're giving up your time for us to educate agents and the public alike about what this means. And it means a lot for me for you to be here. And I'll put down your information in the YouTube video again. Lynn's name is Lynn Kelly, Kelly, and it's lynnkelly.ca. So Lynn at lynnkelly.ca, 778-839-9363. Feel free to have her look at your stuff, but get your stuff, get pre-approved before you buy anything, folks, please.
Quick
Okay.
question, Darcy, before we
Yep.
go.
Yep.
What do you think of that email address?
Okay, that's a whole different subject.
Uh-oh. You don't like it?
No, I think it's good.
You don't like my,
That's a different subject. No
We
okay.
talked about
problem.
this earlier about yeah.
Lynn is different than agents. Just he's kind of making a joke. Anyone who's followed us or me for a long time.
Okay.
Lynn is in a different business than a real estate agent. I don't think she's building a team. She's
No,
been,
no, she's good
you
because
know,
she's got her name at
yeah,
her domain.
that's right. So it's all good.
That's what's really good.
I,
No, it's a
yeah.
positive. It's a positive
So
thing.
thanks very much, everyone, for joining us. This is on all of your favorite podcasts. We also have it up on YouTube. We appreciate you listening to us. And if you have any comments, if you want any mortgage questions, Lynn, realtor questions, Terry, system and business information, me. All the best, everybody, and we'll talk to you soon. Bye.
Thanks.